Microphone check. Screen check. Looks like everything is working correctly here. Good, good, good. Sorry about that. Had to run out and catch my wife real quick before she left. Sprinting out the door, so pardon me if I'm out of breath. But we should be good now. Anyway, welcome, welcome. Looks like everything's working correctly here. Hopefully you all had a fantastic weekend and you were able to rest up and get ready for the week ahead and all that fun stuff. As per the usual, before we jump on in, make sure on the right side of the screen there to read through the live trade room morning prep PDF. Very important to understand everything that is inside there. And just a quick note for you all before we jump on in today, if you're watching on the YouTube side of things, the stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Hey, welcome, welcome. Zach, John, morning, welcome. Everybody else, welcome. Hopefully you're all doing well so far. I hope you all had a great weekend. The weather was fantastic here. Love it. I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super pumped to have you all on board, and welcome to the SSFTG family. If you... Oh, hang on a second. I was recording videos, so the mic is probably... Yep, there we go. I always reduce the good old decibels when I'm recording. Is that better? There we go. Yeah. Perfect. If you aren't a member yet, getting back on track here, you have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways is on YouTube. You can check out the join button below the stream, and that gets you access to the extended hours room, where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the communities area, where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server, and you get that awesome badge next to your name to show your support here on YouTube. It just looks really cool. If you want to take a massive step further in understanding our trading approach and what it is that I'm doing every day in the room, though, look no further than the Day Trading Academy. This is where you can learn how we do everything, but listen, this isn't the small little PDF guide that you're going to finish in an afternoon, all right? Yeah, there is a quick start course, but to really dig in like the Academy does, you're looking at about 19 plus hours of video course materials, and along with that, there's homework, study guides, and that's really just to make sure that you're understanding what's going on while you're navigating the course, which I review personally. And you get the DTA upgrade discount when you're ready to go up to the next step, which is VIP, and that's going to be the top floor of the executive suite. VIPs have permanent access to all that is SSFTG, the Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire morning session, meaning that they're on the fastest connection you can get without any delays from start to finish. So whether you're here from the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. We got some wild moves. I thought my charts were bugged this morning with that move on gold. Let's take a look at some news, get some things going this morning, see what's all happening. Looking on the main page here, don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7. Nasdaq, S&P, gold, crude, euro, Bitcoin, and Ethereum. It's a race every time. As far as the news is concerned, we don't really have anything going on today. 10 o'clock JOLTS job openings. That's it. Forecasted 9.281 million. I mean, realistically, JOLTS typically doesn't do a whole lot of anything, but we'll see, I guess. That's about it. And what a wild, crazy spike to the downside on gold. We'll get to that in a minute. Over on the S&P first, let's start there. We've got the continuation of the upside, which is still just grinding away, working its way higher and higher and higher. If we look at the POC movement from the bottom to top, this will give us an idea that we left behind that POC like we've been talking about for a while, back at 44.0150. When we began to transition over that 44.150, we hadn't quite broken to a new high yet, but they were just starting to peak above that, and we finally got that big break above the high. And that was one thing that we were waiting for quite a while is proof, you know, especially with a top-weighted POC breaking higher. That's really difficult. Now that we've got that extra continuation to the upside, it kind of looks like we might have a funky-looking channel in here. But at the same time, can we really say that we're out of this corrective phase yet? I mean, the one thing that I really like about the S&P is the fact that they missed that low right there, like by literally a tick. Just nicked it and came right off of it, screaming all the way back to the upside. And from there, that's where the higher low transition came. That's where the failure off the POC came. That's where everything started shifting, was off of that low. So, I mean, if that low wasn't there, then, you know, maybe I would disagree that this is the possible leg up to another bull trend. But given that we do have this kind of course of action that it's taken, I mean, we really have to look at it from the sense of, well, this could be, you know, an ABCD correction up, maybe. But if it wants to go further, we could still be creeping our way out of this and be getting a new phase to the upside. And whenever you have a top-weighted POC that breaks higher, that usually ends up being the middle point of a larger move. Something to think about, considering that the low is at 42.24 and that POC is up at 44.01. Just a little bit of a move to the upside if that wants to continue back up. Let's just see where that puts price. That would put it right around 45.85, 45.85, close to 4,600. You know, just a perpetual bull trend that just never stops. It's all good. Over on gold, speaking of the antithesis of that, geez, this thing just got absolutely annihilated. And one of the biggest clues that we were talking about was this pop higher, and how if this was a break-even pop, because remember what was going on before that? If we, well, it's hard to see from here. If we go out to a 60-minute chart, before that drive to the downside, right, we had this huge transition from the top to the bottom all the way down, with a volume that ended up baselining at around 82. Now, we continue that a little bit further forward. That volume never changed, 82.1. We continue it a little further. They finally shifted back up to the 808.7. Now, when the market came time to actually respond to that zone, right here, if we drag this a little further, we can see that it was responding relatively well, but it immediately jerked up, and then it came back and got stuck. So the bulls are going to be looking at this like, well, wait a minute. If this starts failing, we have some issues here. And you can see where they gave up. I mean, look at that big blow, that big rush to the downside. A lot of traders giving up on that move, meaning that the next time it comes back to around that POC is likely going to be a continuation of the downside, and it never happened. So this is a bunch of longs who are possibly stuck, getting just absolutely annihilated on a squeeze. Like, just absolutely decimated. And now that they squeezed them all out, realistically, a lot of times when we have this kind of momentum, it doesn't necessarily have to reverse and you know, keep this downward movement going. In fact, more often than not, when you have this blow off, you'll start seeing stuff like this, where it's almost like they create a new channel or a new trend inside of here and just reverse it all the way back up. That's how V-bottoms usually happen. So given this monstrous blow off on the lows, and the fact that it lined up with some pretty nice structure, and the fact that it lined up with a -2 DP, I mean, statistically, everything is saying that it should go up from here, not to mention below 1,700 on gold. What? There are a lot of bulls coming in this, and picking it up off the lows, they obviously did. But the big question is, now that we've gotten this kind of half bounce, does it go back down? Or do we end up with that transition like we were talking about? We've got to really kind of wait and see. We left behind that POC way back there, and the bulls got obliterated. They may still be long and underwater. Maybe adding in. We haven't seen a POC shift yet, though. Over on crude oil, we did cycle back to the downside, but not enough to break a new low, at least not yet. If we're looking from the left to the right on the swing, from there all the way across, that leaves a, at some point, I think I can. There we go. The POC back at 71.92. Now, we already talked about last week on how this was a fantastic rejection point, reversing back down. Bulls trying to climb back up, trying to get something going, and they failed now back to the downside. That was when all of that news was anticipated to be bearish, but they were going up. Came out way more bearish than expected. They got slammed all the way to the lows. I mean, all of this fits with exactly what you would expect to see, but now we have a situation like we saw in the S&P where they missed the low. We got down to these major zones of support, right? That's great for the bulls if they want to try coming in, but we're not seeing any proof from the bulls as of yet. And if we zoom out to a 60-minute chart, I mean, really, this is kind of a big setback from the bulls' perspective. I mean, if they were trying to buy with this continuation of the upside, buy the dip, fails to make a new high, right? Oh, man, that sucks. Then it rolls all the way down, big dip. Dip buyers come in, get the rally up. They're looking for new highs, new swing highs, new something, and it fails all the way back down again. That's incredibly disappointing. The bulls need to rally it up here, like now, or it's kind of game over. Then we could be on our way back down to the $60 mark, potentially even further, where the last previous support was sub 60s. Got to get back to the 15-minute chart on those before I forget. Over on the euro, we also have the euro, which had that quick pop to the upside, a big dive to the downside, pop back up to allow traders to get out at break even, and then a continuation dive to the downside. Similar situation in the way that gold formed, but a little bit more vindictive or masochistic or whatever you want to call it. I mean, they popped up, they trapped the top, they even trapped the top of the previous two, but left alone the large, and rolled all the way back to the downside. So any sellers who had their stops, let's say they were shorts who were selling this lower high, or they were selling this next lower high, where are they going to put their stops? Now, we talk about this all the time. These are terrible places for stops because they are non-confirmed, but traders will put their stops there. It's a stupid place to put the stop because it's a non-confirmed swing, but that's where they'll end up. And institutions know that. They gobbled them up like they were going out of style and just dunked them all the way to the downside. I was on the wrong side of that trying to pick it up. Luckily, that bounce back up allowed for break evens. But this reversal back to the downside now kind of makes sense because if we plot a volume node on here, almost a guarantee the POC is going to be right about in the middle. And if we continue this to the downside, we haven't seen, I don't think, enough POC. Yeah, enough volume to the downside. And here's what I'm talking about, right? That measurement from top to bottom of the volume node, you drive it to the lows. That's usually where the market's going to want to go to. It went a little bit further, sure, 17500, good psychological level. But a good case argument for that POC being the midpoint, like we were talking about in the S&P. Same situation. They get jumbled up, they create a POC, and then they break through. It's just this is to the bear side. Over on Bitcoin, more continuation to the upside after grabbing that quick little trap on the lows. They, once again, did do one of my favorite type of setups, which is coming back and taking out a previous confirmed swing, but not taking the other. Nice reversal back to the upside, all the way back up, 45s, 46s, now pushing in almost to 46 halves. Beautiful rally to the upside. As far as the continuation goes, I mean, all things considered, I still have a really hard time believing that this is going to go all the way to all-time highs, but with enough fear and where the markets are kind of propped up, seeing stuff like that flush on gold, I mean, you know, gold's supposed to be the stable boy. That's supposed to be not the stable boy, the stable. that's a different video. The stable market that we can rely on, and it wasn't. It just totally fell apart. Now, it's not to say that dip buyers didn't BTFD into that. I guarantee you they did. It's a physical commodity. And, you know, the thing is, are they going to be able to go to their local gold superstore and buy it when it's down in the 1680s? I doubt it. You know, that was like Sunday at 8 o'clock. Maybe the pawn shop, if they got them to look up the prices, you know. But, I mean, realistically, this is a run probably, if we zoomed out farther, to get break evens. And even more so, a BTFD on a major low. I just don't see gold creating anything other than a V bottom here. But hey, you never know. Hey, good morning, good morning. Welcome, welcome. Let's jump over to the Nasdaq here. Take a look at the daily first. As far as the daily is concerned, the measurement perspective, we're still working our way back to the upside. And man, I got to clean this thing off. This thing's a train wreck. As far as the larger pullbacks, we've got the possibility of the wedge being created inside there. Then it would have widened out a little bit further over here. It did fit, but then starts deviating away to the upside. The overall cycling, if we go off of the lows to just generally eyeballing it, got the L3 with more ups. So, okay. Let's go back to here, and we'll go all the way across for our confirmed POC, which I'm sure they used. It's a daily chart. Hang on. Yeah, basically. A little bit of an extra dip there. You could even probably tie these two together. Ooh. Okay. Actually, I'm not going to. That POC up there is kind of interesting. Then let's take this. And we'll move that over here for the confirmed breakout there. So again, we had a confirmed POC dip, nice little higher low transition. We got a top weighted POC, which ends up with a higher low break and a continuation back to the upside. And I'm kind of curious, as far as a volume continuation goes, is that right? No, I was going to say that wasn't right. There we go. So as far as a volume doubling is concerned, that would be right here at 15,000. Oh, great. Man, that sucks. All right, so, I mean, we have some issues. This is definitely telling us that this may be a little bit overvalued up here. We've already utilized the previous POC. We've already utilized the last one. You know, one of my favorite setups, which is kind of creeping in the back of my mind here, previous double major confirmed swing low, trap the last but leave the other one behind. That offers up, if we look at it, from a risk-reward standpoint, and granted, this is a daily, so you're talking like the QQQ options on a huge swing here, but if we're looking at it, this does create a situation which is almost favorable enough for a 2-to-1 if they get that little excess pullback. We get a dip underneath here, and again, transpose this forward. At the time, the high would be up here. So the market rolling down, filling in that area, and then coming back up, the 2-to-1 objective is easily inside that. You might even be able to squeak away a 3-to-1 inside there for runners. So a lot of traders will be looking for that bigger pullback. The problem is that bigger pullback's $3,000 away. that's at 12,904, you know. So trading at 15,106. Ooh, that's tough. Let's go all the way from the bottom, see if anything has happened from the lows. The POC's probably still going to be in the middle, but we'll check. Oh, crap. A minute. There we go. Okay. So effectively, the POC of the entire leg to the upside is back at 904.75. We've got the previous confirmed POC back at 911, and they left behind the one back at 37.25. That's 12,837.25, just to clarify prices here. So 13,904.75, if we do get a little bit of a pullback, would make sense. So far, we don't have anything dictating that sellers are coming in with any volume. We're not seeing a POC shift to the upside. We are seeing possibly 3 nodes building with the third one still being created, which means that we might get stuck up here for a while. And that lines up with what we've been talking about for a while because, well, you know, realistically, with this type of transition and we have that big giant bear bar off the top, the market gets stuck and grinds up for the next, like, week or two. Looking on the 15-minute chart, I did already mark this up this morning. I was going to wait, but I knew that this morning was going to be a little bit busy ahead of the open, so I wanted to get this taken care of beforehand. So when we're coming into the Nasdaq, coming off the 15-minute chart, we have that 5-wave cycle to the upside. And with that 5-wave cycle to the upside, we were dissecting it in one of 2 different ways. We either had the 5-wave structure that was like this, or we have the 5-wave structure, which was actually looking like this, which is way, way, way wider. Now, again, when you have that much separation away, it starts becoming not part of the pattern. It's a different pattern. So looking back on it, it makes more sense that we've got the 5-wave completion. We had a wedge ABC where they went sideways, broke to the downside, massive aggressive breakout that failed to follow through. And when they failed to follow through, we just went into another wedge, and now we're continuing back up. This may be creating wave 1, wave 2, and we haven't seen wave 3 yet. We've got to get above these 15,175s to get that going, but I mean, it's definitely got a shot. Now, what's interesting is where the market pulled back to on that giant flush. Do you notice anything? This is a confirmed POC retest, which had a near perfect bounce. Not bad. Unfortunately, they decided to do it on Sunday at 7. You know, so little bit of a kink in the hose there. That's a little bit problematic, but nice dip. I mean, they got it done. A little bit frustrating in the way they did it, but all good. Onto the 500 tick. Jeez. The 500 tick with a jumbotron slide to the downside, and after that, a V bottom. We do have a full flip as far as that is concerned. When you have a full flip, you're typically expecting to see an L1 pullback. which we are resting on top of right now. Nice. Except for the fact that the open's right here. All right, give me 1 second. My daughter needed something. And then we'll jump into the open. 2 seconds. Okay, there we go. Is September typically a down month for indices? Really good question. So one thing that I do love looking at is the long-term correlations. And if you're looking at a monthly, if we flip-flop over to the QQQ and we look back. So currently, we're in August, which is still forming. But if we go back to the last August, was very bullish. September was bearish. If we go the year before that, August was mildly bearish. September was bullish, kind of 50-50 so far. The year before that, August was bullish. September was basically a doji, but technically bearish. If we go back the year before that, August was bullish. September was mildly bearish. If we go the year before that, August was bullish. September was also bullish. So it does seem as though, typically speaking, August tends to be a bit more bullish and September tends to be either flat to bearish. If it is bullish, it usually doesn't go very far. If it is bearish, if it's bullish, doesn't go very far. If it's bearish, it typically doesn't go very far, but can extend. Again, we go the year before that. August was bullish. September was bearish. The year before that, August was bearish. September was bullish. Interesting. The year before that, August was bullish. September was also very mildly bullish. Before that, August was bearish. September was also bearish. August was bearish, September was bullish. Yeah, COVID is definitely going to be a caveat to that equation. And keep in mind, we're looking at the QQQ. But still, you know, it's something to consider. We got a couple seconds until 9:28, FYI. September does tend to be typically challenging, though, it seems. It just came, did not listen to the Bitcoin brief. Do you feel this Bitcoin move is strong enough? The 200-day also broken. Keep in mind, a 200-day being broken is about as about as relevant as a 173.54 being broken to me. An average is an average. I couldn't care less what number it is. As far as Bitcoin is concerned, the way that it looks, just I want to trust it. I really, really want to trust it. And I think there's enough fear in the market where they may be able to spark a catalyst to go up. But historically, there has never been a 55% pullback before an all-time high run. Historically, there's always been about a 40 to 50% pullback, a rally up that rallies up underneath the highs and then crashes down another 60%. I don't trust this rally at all. Now, should traders still be long? You know, I can't tell you what to do with you, but I think it's bullish for right now. Yeah, you still expect upward momentum. Historically, we should see a rally up to around 50,000 to 52,500 based on probability or percentages rather. But from that point, based on percentages, we may see Bitcoin retreating back to 19,000 to possibly 12,000. The only way that doesn't happen is if this 55% correction does actually hold, which would be the first time in Bitcoin's history, by the way, from the bigger corrective phases at least, and goes back up to the highs, then different story. But for right now, no, I don't believe this rally at all. I'll still play it, but I don't believe it at all. 9:30, here we come. S&P mild close to open gap, not much. I mean, it's barely anything. 44.30 is the actual settlement price, although, oops, sorry, that's 44.30 quarter is the price. Bulls do rotate back up off the L1, so it is a full flip. It's right out of the playbooks. The caveat being, of course, going into the open, causing a bit of volatility, but from a pattern perspective, it's there. We've got the continuation for the L1 back to the upside, and we're leaving behind a fairly obvious swing. As far as the S&P is concerned, basically all of Friday was a giant range, and it couldn't even make new lows or new highs by the end of the day. And where are we at the moment? Well, we're kind of nowhere. We're sort of right back in the middle. If we look back at all of Friday's price action, its POC was smack in the middle as well. It doesn't help. What a mess. Now, I do have to say, the one thing that does stand out here is the fact that this gap has not been filled back at 421. They couldn't get that fill on Friday. Bulls with more continuation back to the upside. As far as a structural perspective goes, I mean, we don't have a whole lot to work with here. We just have a reversal off the bottom in V top, V bottom, straight back up. The only pullback that we really have of any substance was an L1, which was expected into the open. That was a little bit of a bummer. Now we've got some more follow through. We've got to kind of wait and see how they want to approach this. From the bigger picture, this makes perfect sense for the market to continue back up to the highs. At least back up to the 150s. Previous inside swing is 134s. That may be what they're cycling off of now. It just doesn't seem as likely. As far as the S&P is concerned, I really like the gap they left behind at 23.25. I'm going to cancel the S&P. I want to give it a little bit more time. The Nasdaq's creating a nice little short-term range here, but the pullback zone is going to be a little bit further down, like the 109.50s or so. I'm pulling back off the S&P a little bit because of the way that they transitioned off the top. If they wouldn't have gone this giant bear engulfing, basically taking over the entire range going into Friday's end of day, I'd be a little bit more interested, but I kind of want to see how they follow this through. That's a really, really heavy-handed start. Let's bring this back so I can actually see it, though, yeah? How likely is BCH to reach POC at 680? Yeah, this was the concern on the S&P. I don't know. I don't know. Nasdaq, nice little dip back, but there's some pressure going on here. I think, if anything, that would be a likely objective for BCH to get back up into the 680s. That would make sense, at least. But the problem is that POC has since changed, at least on Binance's data. That POC is now down at 507. So it might be a short-term area of resistance that would be, the first objective. POC shifting down in the S&P really quickly here. Buyers may be picking away at this 2075. That would be the upside objective in the near term, though, on BCH. A lot of back and forth, still some pressure going on here. They filled the gap. They got that 21 quarter on the S&P. Job done. I'm going to look for a continuation to the upside on the Nasdaq, but keeping it on the smaller side because the upside objective here is going to be for a continuation phase around the highs, and I want to make sure that it fits. Still fits. Ooh, okay. Now we might be able to play around a little bit more. Got a nice little dip back, finally finding some value in the previous area of interest here. Nice little dip down. I have to... Oh, I didn't get filled on the extra one. I'm going to try to play around on my average a little bit, accept the loss on the first portion, but I really love this dip for the continuation up. That puts my average in an incredibly good spot. There is still some bearish pressure, so this might just be a midpoint before a larger pull down. If they do start dropping through the lows, then realistically, there's not going to be much support until the 15.050s. You've either got to be okay with that risk or it's got to be a cut and run. I think this is a beautiful retest for a launch point on the bulls to try to take back over. But if they fail here, it doesn't make sense to stay long because, again, that dip is down to the 15.050s. Nice little pop back up again. Looking for upside objectives back up towards the settlement price, but around the just ahead of the 100s. I mean, the POC they left behind is the 150s. But from the bigger perspective, you can see the mentality here is looking for the continuation phase to go back up to the 150s, possibly even up to new highs towards the 200s, if it can manage it. It's very early to tell something like that, though. And there's still decent bear pressure. I mean, it's early. POC shifting a little bit lower. I'm going to use that as an excuse to reduce a bit of risk ahead of a potential larger drop. The sellers didn't really break away. I was going to say, the sellers didn't really break away there. That didn't prove much. It was enough of a reason to reduce the risk, but... POC shifting up at 15.084. It is at that previous range high, so if the sellers are looking for a midpoint before a secondary leg to the downside, this would make sense for them. But I still really like this dip. We're hitting the POC zone. Closing above. Nice close above. Back up towards settlement. Nice initial objective here. Still like this for a wider, longer term reversal. Reaching up and grabbing those 2-to-1s now. Larger objective next is going to be for 3-to-1s, which are, they're back at the previous POC. That's a nice spot. This dip back is more likely just, again, I'm looking at it through the lens of bulls buying this dip for a bigger cycle back to the upside. So this dip to me would make more sense as buyers who are looking to re-up their positions on a dip. Hey, hey, hey. Welcome, HLS777X. Welcome to the family. If it didn't pop up already, it should have given you a Pikachu. I might have missed it. Bull's still trying to get the transition to the upside. I haven't necessarily seen... I mean, there's been plenty of reason to reduce some of the risk, but this pullback, again, I think it kind of makes sense from the bulls to try to re-up. Re-adding does increase for a 2-to-1 up towards the 15,105s. Really nice bull bar bounce off of those lows. That looks like that's exactly what that was a re-up for longs. I didn't hit the buy button hard enough, I guess. Oh well. Let's look if they can re-up back for another move. Nice first area back at the previous target point. Makes sense to at least reduce a bit of the risk here. But the continuation target to the upside 2-to-1 at the very least is 105. 3-to-1's a bit further up. Settlement's just kind of hanging out in the way at the moment. That's fine. Starting to break away. Trying to reach out. Back at that previous major point of volume. First objective, nice. Second target off, 2-to-1. Beautiful move back up. Fantastic. I wish I had more. Like I said, I should have hit the buy button on that dip harder. I didn't. I mean, hindsight's a B sometimes, but I feel like I could have maybe bought in a little bit more aggressively. Outside of that, though, I don't feel like I could have managed that any differently. I like the move up. If I did have more contracts on that dip, which is why I said dang about that, because the next continuation would be a 3-to-1 objective to the next volume node. It's just not worth holding on to the risk after receiving a 2-to-1, another 2-to-1, and another 2-to-1, you know? More continuation back up. Traders who are looking for next objectives, it might be safest just to front run it a little bit around the 120s because they do have that node at around the 108s. If they can break above that, though, the actual point of interest, do what you will, 130s to 135s-ish. See if they can get maybe another pullback if I'm lucky. Maybe. POC is bottom shifted on the Nasdaq. I've been too engrossed with the Nasdaq to, I'm sorry, and the S&P. I've been too engrossed in the Nasdaq to even say the names right. Let me get the POCs right here. Yikes. Really? Wow. Okay, well, pop that POC right up on the top. And then dragging it a little bit further forward, they haven't come back. So, I mean, the bears got their objective to the downside. They are kind of complete. Now, this is sort of megaphoning out, right? Look at the way that we kind of transition into this. Big move down, big move up. This looks like just two of these, right? Which would effectively mean that this is nothing more than a double value pullback. If you look at from the top to the bottom, that's a 0.2% pullback. If we look from the top to bottom over here, it's a 0.46. The initial drive was 0.41 before they started finding a bottom down here. So, I mean, this is nothing more than a double value pullback before a continuation higher. You can see these. I mean, I know we usually talk about double values and all that on dailies and, you know, Apple stock and all that, but you see it on these charts just as frequently. A technical is a technical is a technical. Market's starting to pull back a little bit now. That was a heavy bear sequence, but didn't find anybody anybody to follow it through. Geez, they just got ran over. 10 o'clock news is next. POC on the S&P is also at the lows, 44.19 quarter. The first five, though, $29 quarter. Oof. Holy moly. Bulls are coming in strong up here. Really, really high to force buyers in on this, but it might pay off. The risk is high. The reward is little. Probability good. Talk like caveman. Probability good. Give me 1 second. My daughter needs help. All right, I'm back. Sorry about that. Can you go over why buyers up here would be high risk? Because the overall stop placement in terms of making the trade operational would either have to be buying above the top of, whoops, hang on, let me use the right color. Blue on basically black doesn't help. If buyers are buying up here, they're either met with the fact that they have to risk underneath this giant bull bar, which means that the reward has to be half to one, right? Half to one, scalpers, low, high probability, really high risk. You're always in this situation risking twice as much as you're willing to make. That's the only way that that trade is feasible. If you're taking it outside of that, then, you know, you're either risking very little for a more, which would be a 2-to-1, but your probability can never be higher than, you know, 50-50, technically even 33. But so as an example, if you look at this from a scalper's perspective, right? Bulls who are buying here, they know that they have to risk a lot, but the reward is fairly high probability that it's going to hit. If you want to know why that candle stalled the way that it did and why it did where it did, that's why. Algos. They're everywhere. That's what I mean by high risk. Now, there are definitely ways to manage it and adjust and modify and, you know, et cetera, et cetera. But 10 o'clock news is around the corner. S&P trying to get the reversal back to the upside, although that first bear bar was pretty vicious. Looking across the field here to see what's going on. Nothing. Nothing's really happening. The market's actually very calm, all things considered. Maybe the calm before the storm. From a cyclical perspective, looking at where we're at, we've got an L3. Typically, L3s procure L1s. It did. We follow through with another. Oh, they haven't actually gotten anything yet. I thought they got the L1 visually, but they missed it by just a hair. Let's load up L3s. Rolled into a 1. And now they're just hanging out. Got a lot of traders who are going to be looking for a continuation on some type of patterning pullback. S&P traders may be looking to scalp underneath that previous bull bar. I mean, again, the POC is just down at 19 quarter. I'd rather see something like that, you know. It would just make a little more sense. Hey, you know, that bear bar, I'm not gonna buy into that bear bar, actually. I'm gonna sit on the sidelines and let them do their thing. No thanks. Now, keep in mind, if you were looking to build into a trade or a type of fade, this is the perfect spot for a trap to take place. I mean, realistically, looking at what just happened, we came down, we filled the gap, which they couldn't do on Friday. Job done. Now we're back above it. If anything, if traders are going to be trapping shorts, that's the spot they're going to be trying to do it. I just don't really feel like fighting that battle at 9:55 with news in 5 minutes. You know what I mean? So a lot of traders will be looking to buy into this short as assuming that it's going to be a trap. POC is shifting up on the Nasdaq. And on the 15-minute, it is also. Now, we do have some really, really strong separation on the Nasdaq. As far as the candle patterning is concerned, we've got some nice candle gapping to the upside. It is all inside this giant bear bar. So, I mean, to be fair, this is basically just a twin reversal that took a little longer. Now the question is, how do they follow through? Is this volume they're building here just a midpoint? Or is it a top before this thing collapses down? If it is going to drop down, the objective's 15,030. Looking at the developing POC off of the more recent top after the completion of the 5-wave, we're back at 15,095. Oh, joy! Right in the middle. Fantastic. Still no pullback to L1. Wow. POC is shifting. We're kind of hovering. From a cycle standpoint, in the very, very short term, pretty obvious at least that it stands out. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. But the concern here is that Wave 2 was nice and clean. I'm anticipating Wave 4 to be not so clean. So this makes more sense that this is all still part of wave 3 if this goes back to the upside, which means that they're probably looking for objectives somewhere around the ballpark of 1, 2, 3/4. Now, if it does start pulling back a little bit further, then we may definitely be building into wave 4 for sure. But I feel like we need a bit more info yet. And news right around the corner. I mean, perfect timing. What better time to have news? Starting to pull back a little bit further, but hasn't quite hit the L2. We've got the news in 10 o'clock right around the corner here in about a minute and a half, and we also have the end of the morning session until we transition over to extended hours. So feel free to get those questions in, and then we'll switch over. I do love this pullback. I mean, this is a really, really nice pullback, but I've got to see something that's just a little bit more concise, you know. Historically, we should see a pullback to like the 100s. The problem is if they go a little too far, then they invalidate the entire wave structure. So they kind of have to make it work now. Maybe some higher lows or some traps or something. $11.75 POC just kind of hovering. Now it's starting to look more like this may be wave 4. Okay. I mean, depends on what they do here. Still allows upside objectives towards the 128s. $10 o'clock hits, news hits. Technically, this is still an L1 pullback. They never did get the L2. Let's do a final call for questions on the morning side of things, on the morning session here on YouTube, and then we'll swap over to the extended session. Now, this looks like they might be trying to get a little bit of a two-legged pullback. That looks a bit nicer. That would invalidate the weight. Ugh. They almost need to go higher first. Making this hard on themselves. Now, a nice higher low transition would be pretty solid here. L2 tested, pushing in. Oh, is it still valid? Is it still valid? Sound like Grammy Jane over here. Technically, it's to the tick. Oof. 95.75. They hit it. Okay. Well, let's use this this kind of back and forth sloppiness here as a time to transition. Then better time than never. So I'm not seeing any other questions come in, but if I did miss any, feel free to shoot those over to me via email on jhb@ssftg.com. Of course, on YouTube, you can also drop them in the comments below. If you're hanging out for the extended session or you're sticking around, just hang out for a minute. We'll transition over and we'll be good to go. For the rest of you, though, I hope you had a great morning, and we will see you all tomorrow, right? Have a good one. We'll talk to y'all later. Thanks.